What's happening?
Hey, Brandon.
All right. So welcome to the Conscious Wealth Studios.
Yeah, it's looking really good.
It's professional.
Yeah, you've done a great job.
Thank you.
You're welcome.
Thanks. It's been a lot of hard work and there's still a long way to go, but every production's getting better.
Yes.
Yes.
We'll continue.
Live from Atlanta, Georgia. Here we are in the Conscious Wealth Studios. And I think we're going to have an interesting discussion today. It's the last one of the series, probably for the new year, because you're off on paternity leave sooner than later, than sooner. We don't know.
Hopefully sooner than later. We'll see how much I can enjoy my December.
Yeah.
Maybe get some sleep by the end of it.
Maybe.
Probably not.
I don't know anything about it, but I don't think so. So this is really exciting. And one of the things that we've been debating a lot, discussing in investment committee, which is so important for us to have, we have it consistently every Thursday of the month, has been about the unanswerable question of whether AI is in a bubble or not.
Yeah, and I think it comes at a weird time as well, where there's always the question of, is something a bubble anytime asset prices rapidly rise, right? Any industry that experiences fast growth, people think, is this too much too quick? Is it a bubble?
Maybe we should pause, thank you, and talk about what are some of the bubbles that we've seen in history. Tulips.
Tulips, yes, the Dutch tulip crisis.
Railroads 3 times in the second half of the 19th century. The radio.
Yep, the radio. The telephone to some extent.
Yep.
And just kind of the infrastructure of that. Automotive really had its own form of bubble too in 1929, the Great Depression. Really washed out. Like, I think there was 500 auto companies in the US, and we now know there's only like 4. Yeah. So yeah, there's all kinds of interesting concentrations and bubbles and weird pricing markets.
And of course, the most modern examples, dot-com bubble, 1999, housing crisis, 2008.
Correct.
All bubbles. They go through this thing where they're, so the one thing that all these bubbles have in common, technology.
Yeah.
Right? Like, there's a technology, everybody says, this is the technology of the future, and the future is tomorrow. And
buy it today.
There's a lot of exuberance. Get ahead of it.
Absolutely. And it's interesting too, because I think one of the reasons the bubble, quote unquote, feels more real now is because there's also a question of, is there maybe a recession on the way, or could the bubble cause a recession, right? So the great financial crisis .com bubble differed because the tech sell-off in 99, 2000 didn't plunge us into the dark ages of a recession, but the housing crisis did, right? And so I think people are always thinking, okay, there's a bubble. Maybe the bubble will cause a recession, which affects me, not just my asset prices. Because otherwise it's just, the stocks are expensive, right? Because what is a bubble? A bubble is supposed to be like a scary thing, right? It's like, oh, it's going to, what do bubbles do? They pop. When they pop, bad things happen.
Yeah.
Right. But
so
people
what you're saying is that not all bubbles are broad-based to destroy an economy.
Yeah,
but
a lot of bubbles don't.
What could happen with the AI right now is it could be successful and really destroy the economy, or it could fail and really destroy the economy.
Yeah, or neither, right? Yeah. Like, I mean, one interesting thing when I was doing the research for this is the companies involved in the AI bubble that have gone up so much in the last, call it 2.5 years, are some of the biggest and best companies ever to exist in the world. Right? Microsoft.
Let's say biggest.
But like, if you think about capital, like the way they're capitalized, these are strong companies with huge revenues that were doing really well before ChatGPT launched. Right. And so the thought for them before this new technology was, we're going to keep being successful in our core business. Maybe something new will come along.
I'm going to pause you there and say, like, 50% of the GDP growth of first half of this year was because of AI spending. So that is a systemic.
Yeah, it's significant. And I think that is true this year because a lot of the CapEx started to happen, right? So originally, CapEx, the spending that companies do on capital expenditures, meaning deploying cash or debt to buy assets.
And the assets are 2 things.
It's usually data centers and
microchips
inside
the data centers.
Yeah, yes, exactly. And so, if you think about it that way, it's like, okay, well, is the spending or the GDP growth, is that building tangible assets? And it has to be, right? So you're building data centers. There's kind of this weird thing that happens where maybe you just pay too much for a data center because the AI didn't make you as much money, but now you have an excess of compute. And that's important for big tech companies generally, especially as they expand out into other markets. And so they're building useful assets.
And as I said in the beginning, this isn't going to be a black and white issue and there's no right answer, but it's important. Yeah, they're building assets, but unlike the telephone, unlike railroads.
Mhm.
These chips will be obsolete in 3 to 5 years.
Yeah, I mean, maybe a year, right? Like NVIDIA, yeah, like NVIDIA is
And
making
that's
new
what-
ones every year.
Yeah.
Right.
So I wouldn't say obsolete in a year, but
Mhm.
yeah. So this enormous amount of spending is being
Sure.
done on chips. That
Mhm.
like, so for instance, one of the big things with 1999, the dot-com, was a lot of telecoms went under.
Yeah.
Because they were creating fiber,
Mhm.
and because the internet was coming tomorrow. Well, the internet
Right.
didn't come over. They had this huge capital expenditure.
Mhm.
It took a while for us all to get fiber,
Sure.
but it was okay because fiber still works.
Sure.
And it's still like the highest level
Yeah.
of speed.
Yeah, absolutely.
Where these chips, there is a lot of money being poured into them,
Mhm.
and they will be around, but they may not be nearly as valuable or even valuable.
Yeah, absolutely. And I think once again, like you made a really good point earlier of like things getting washed out. When I looked at some of the top 5 companies, 4 of the top 5 companies at the top of the dot-com bubble still exist today.
Mm-hmm.
Right? So Microsoft, I think General Electric, though it had its own storied past of splits and reinventing itself, Intel and Cisco all still are around. And actually, barring one of those, is doing really good. But Lucent Technologies was obviously a huge name. It got eliminated, right? It did not survive that part of the bubble. And a lot of other companies that weren't at the tippy top also did not survive. So we're going to see a washout, and we probably should, because there's always going to be money invested in a project that doesn't pay
There's
off.
a lot of VC money,
right? There's a
and
ton
people
of
say,
VC
"Well, there's
money.
VC money, therefore it's not a bubble." And I'm like, no, all that means is that's a lot of people.
Yeah, I mean, it may not
speculating.
affect you because you're not exposed to it, but there's a lot of money there, and it's someone's money, right? These VCs a lot of them aren't independently wealthy people. They're pooling capital for investors. It will affect balance sheets if it doesn't go well. I just think it's interesting that it comes at a time where I think some lessons were learned by the dot-com bubble. A lot of the infrastructure that we're then building on top of exists, right? Like railroads didn't exist. We had to build them.
Mhm.
The internet didn't exist. We had to build it, and we didn't even know what it would look like 20 years down the line. Like no one building the internet thought Reddit would exist, or YouTube, or any of the things we have now, or Netflix, or being on a sunny beach live streaming to your friends that you're there. No one could have even conceptualized that in the 90s from
Mhm.
like a hardware level, but all that exists. So adding AI on top of that, it almost practically doesn't seem like that big of a stretch in terms of making it happen.
We're going to disagree on that one.
Okay. Yeah, it's fine.
Yeah, I think it is. It doesn't, that we don't have the power structure for it. And,
Yeah, that's true. That's going to be the big issue.
Yeah.
Yeah.
And we don't have the data center issue for it. Where it's
Mhm.
happening, but
Yeah.
we don't have it yet.
Totally. I think
Yeah.
we both agree that it's still really early innings on this,
Yes.
right?
And everybody says there's going to be a washout, but it's not us.
Yeah, exactly.
It's not us.
Yeah.
It's not OpenAI. No,
Mhm.
it's not
Yeah,
Google.
it can't be the people winning now, right? And the answer is, yeah, it probably will be to some extent. It doesn't mean Microsoft would go away because OpenAI failed, right? Microsoft is still one of the largest tech companies. It was before OpenAI, and it probably still will be afterwards, depending on how things shape out. So there are nice fundamental businesses in there. There are going to be companies that fail, right? We're probably going to have pullbacks, and it's probably healthy to do so.
Well, it has to happen.
But-
That's a natural part of the market.
But I think the idea of, is it a bubble, meaning is it soon to collapse or pop? I just don't know if so, I don't know if we're there yet.
No, nobody does.
Yeah.
I think the other thing that's very concerning for me about it is the lack of transparency around these.
Yes.
Yeah.
I agree. I mean, one of the biggest problems with this whole thing is that OpenAI is kind of the centerpiece, and we can put up a chart on this video. There's a big circular money chart of all the companies investing, et cetera. And at the center of all of it is OpenAI, which is a private company, which doesn't have to disclose really anything going on in its business.
Yeah.
And its CEO is feeling very important and powerful and has said some, hey, if we blow money, then who cares? And I don't care if it's 50 billion or 500 billion. Well, investors do care typically. And so someone is going to have to show you the money or kind of take the next step to commercialization sometime. And it'll be interesting to see when that happens.
And all that money is being sucked out of the rest of the U.S. economy.
Yeah, of course. It's money. It has to go somewhere.
Yeah.
And that means it's not being spent on other things.
Other types of industries that we're trying.
Totally.
Trying to build up at home.
And
people.
Right? I mean, people are going to be sacrificed for the additional CapEx spend.
Yeah.
Yeah.
No, so let's talk more about the circular, the danger and how the circular economy within these handful of companies can make it actually a bubble.
Yeah, sure. So, I mean, a great example is OpenAI says, we want to build data centers.
That's right.
So they'll go out and they'll find a company to partner with, and they'll say, we're going to commit $10 billion to buy and build a large data center for our compute power. Well, what do those data centers need? They need chips, they need the backhaul, they need all these ancillary things. We have big companies for those. And so then what will happen is another company like NVIDIA comes in and says, we'll pledge money because they're a big, successful, cash flow rich company. They go, we'll support that. We'll also invest in that data center.
Yeah.
And then the expectation is, okay, NVIDIA is going to front us the money to help us do this. And then we'll go back and buy their chips with future revenues to basically put some money back in their pocket for helping out.
And we'll take out debt, and they'll take out debt, and
right,
we'll have equity in them.
Right. And all of a sudden it becomes a little incestuous, if I had to say, but really,
I would say House of Cards.
House of Cards. Sure. We'll see. I mean, I don't know the way the news is going, but the idea of it is that these companies are all kind of fronting each other money at different stages of the value chain.
Yes.
And like Lucent Technologies, if someone can't deliver the goods or there's a major gap in funding, I mean, the music could stop and there could be some unwind from that.
There's a credit crisis.
Totally.
If there's a credit crisis.
Totally.
Yeah. Or if we don't get the type of revenue expected. And that's why we don't know if it's a bubble.
Yeah.
If by 2030 they have the trillions of dollars of revenues from this, then all the investment paid off.
Sure.
We can pay off all the debt.
Yeah, that's exactly it. And I mean, all of these companies have different priorities, right? So, Microsoft, who is one of the biggest names I've been mentioning in this, the reason I mention them is because they own 27% of OpenAI. So they have a vested interest in making OpenAI happen. And they also buy a lot of these products from other people. They have the Azure cloud. They use Oracle for some of that scale. Like they have all these relationships. And there's going to be a lot of people putting a lot of money into this basket because if you have a company you put $100 billion into and it has a future valuation of $1 trillion, you're going to make a lot of money as Microsoft. It might be the single best investment they've ever made. So, or it could blow up. Right.
Well, and the problem is then Microsoft's really taking the lead, and now and then Facebook says, well, we got to get in this game. We're going to get left behind.
Absolutely. And Google's doing the exact same thing.
Google's doing the exact same thing. So one of the concerns about is it a bubble or not is that companies are chasing after the same prize.
Yeah. And this was actually, we can link an
It's
article.
like they're competing to displace people.
Yeah, no, I mean, they're fighting.
Thanks, tech.
Yeah, seriously. But no, there's a real knife fight out there with the big tech companies where all of them make a ton of money. They have an outsized influence in the global economy.
Yeah.
They're going to use every tool and every dollar they have to try to win whatever this
could be their poison pill.
Yeah, it could be. I mean, this could be the thing that separates them from their competition for the next decade.
Yeah.
If they get it right. It could also be a bubble. So we don't know yet.
Well, we know there will be, I don't know, so I'm quite certain there will be a shakeout.
Yeah, there always is.
There always is.
There's never been a point where a new technology's come out, everyone's put a lot of money into it, and someone doesn't get hurt. Yeah. It just simply doesn't work like that. Right? There's not enough money in the system.
Now, other people would say, well, it is going to happen. I mean, 2030 is like tomorrow. We're almost at 2026.
Yeah.
And people say, well, the adoption of technology is so quick, 2030 it's going to work because we've got this Moore's model and we can tell you how quickly it goes.
Yeah, but like we still don't have nuclear fusion. We still don't have flying cars. Like, it sounds silly to say that, but like
flying cars.
I agree. But like the thing is, we've always had technology that we were thinking, oh, well, we're only like 5 years away from that. We're only 10 years away from that.
Yeah.
The reality of the situation is no one really knows what they want from the technology yet.
Yeah.
ChatGPT is cool, but it only has a 14% adoption rate in corporate America.
Yeah.
Like if you want,
and most people aren't paying for it.
And most people, a lot of it's
3%
free.
of the people are paying for it.
And so there's going to have to be a serious commercialized product so that a megacorp comes in and says, that product is great and it's well thought out enough to where I can just pay you money and you come set it up, because no company wants to go drop a bunch of money and then screw it up, right? They're going to want it to be a working thing. Yeah. And I think that's what we're waiting on, is who's going to make the commercially viable product for business to business, because that's where all the money is, right? Retail people will find a free way to do it.
For now. Yeah. So is it a bubble?
It's way too early to tell, but there is plenty of risk out there, and that's why you just have to be good risk managers. The thing we always talk about.
It is risky. There's systemic risk. It's exciting at the same time. There's all these new possibilities.
Yeah.
So Next week, next month, while you're not here, could you send your agent,
Yes, I
your,
will.
your agentic AI to come sit?
I will. I'll
Yeah.
start training it now.
Thank you.
Yeah.
Thanks. Appreciate that. All right. Well, please keep us updated. Maybe the first video in the new year, you can come by with a baby in your
Yes,
lap.
I
That
hope
would be
so.
fun.
That would be fun, actually.
Yeah.
Enjoy that.
Well, at least
We'll just put little
just a
headphones
little
on
high
it.
real quick. Yeah. All right, cool. Thanks.
Awesome. Thanks.